Hey guys and girls, it's Nathan Birch here, and I might sound like shit, but I feel really well. Losing my voice a little bit today, so sorry about that, guys. However, I just saw the news regarding the interest rate decision by the RBA today, and interest rates have dropped by a 25 basis point, so 0.25%. Whether the banks will pass it on yet, I don't know. But as a property investor, you know, I look at the holistic approach. It's not a matter of buying a property and praying and hoping that it's going to go up and whatnot. What I see as a property investor is that I need to be proactive and take decisions, you know, based on educated decisions. From that perspective, you know, interest rates play a big role in directing where the market's going to go. And I've been following this for quite a while now, probably about 5 years, looking at cash rate futures and all that sort of stuff. I have said in numerous videos and on Facebook and all that sort of stuff that I predict certain rate cuts at certain times. And I said that I'd see a 0.25% to 0.5% rate reduction this year at the end of last year. We saw the first one happen in February when the RBA caught up, which was expected from my perspective. And I made a call that in March or April would see a 0.25% reduction. I'm unsure why it didn't happen in April, but we've seen it now here today in May. And what does that mean for the future of the property market and for your own property portfolio? For me, it means the simple fact that I save myself about 30 grand a year, which is good. For me, I've seen great growth over the last couple of years based on the properties that I've purchased over the previous years. Based on, you know, what's happening out in the current marketplace, Sydney is very hot. Are we in a bubble? I don't believe so. But I do believe that people will get emotional and pay silly prices for properties. It is still possible to pick up, you know, 2-bedroom properties in Sydney for around the $300,000 mark, but those days are ever diminishing from that perspective. So what do I see as opportunities in the marketplace? I feel very strong about Gold Coast and Brisbane markets. The markets have been depressed since the GFC, and they're on their way back up now. From a perspective of rental yields, I've got the best rental yields, and we're here with the lowest interest rates in history now. Based on the Sydney market, I think that, you know, there's still growth there. I still think opportunities lay ahead. If we look at the Sydney market beforehand, going back 10 years ago when I was building my property portfolio in Sydney, 2005, 2006, 2007, 2008, the market was tremendous. It was terrible. It was woeful. People were, you know, going broke left, right, and centre. Properties were being repossessed, all that sort of stuff. And that was a fantastic time for me to be buying in the marketplace. I don't like getting caught up in, you know, buying a 3-bedroom house in a house commission suburb around Mount Druitt or in Western Sydney for 500,000 plus. That doesn't feel good for me. I like buying, you know, t-shirts. I was just in Queensland on yesterday, and I picked up t-shirts for, you know, $15 and stuff. Why? Because they're on sale. Winter gear's out at the moment. You know, these things were selling for 60, 70 bucks before. I like buying things of value and that are below market value. The properties at the moment in Sydney, there is still good bargains out there. You can always find a bargain in any market. However, they are getting few and far in between. And the Gold Coast and Brisbane markets, you know, have gone up a little bit over the last couple of years, but have been buying aggressively out there. And I expect that the best days lay ahead for those markets. So that's my thoughts on the markets. Once again, you know, building a property portfolio, buying properties isn't a buy, hope and pray sort of strategy. You want to be buying things in line with your goals and understanding, you know, what's happening in the current market. And I look at, you know, the property market in whole like, you know, an economist would. I want to know what's happening in the share market. I want to know what's happening in the economy. I want to know what's happening in the Australian economy. I want to know what's happening in the global economy. And a lot of research goes into that to, you know, give me confidence when making decisions on how aggressive I should be or how conservative I should be at certain points. And, what things to watch out for. Looking at the Australian market at the moment, the country is facing some economic challenges as far as jobs and turnover of money and all that sort of stuff. The interest rates will get reduced because the fact that we need to spur on the spending habits, so people don't lose their jobs in retail and all that sort of stuff. The mining industry is sort of dead at the moment. I've got lots of clients that work in the mining industry that have been put off and stuff like that. I'm lucky that they're in a good financial position with their property portfolios and stuff to look after their lives post getting a massive paycheck each week, because earning 200 grand a year, 300 grand a year in a mine, fly in, fly out, it ain't sustainable, not for for forever from a price perspective of getting paid, nor is it from being able to physically do it for someone's whole life. So there's been a lot of smart people out there that have made money, and there's been lots of people that have bought properties off that haven't made good decisions, and it's important that you arm yourself up with resources and education when building a property portfolio to ensure that you can capitalise on what's out there. And I think there's going to be some awesome days ahead for many investors out there who are smart and taking calculated decisions and not being flippant and emotional, just purchasing for the fun of it. So that's my take on it, guys. Congratulations to everyone that has won from I wouldn't say winning, but today's decision, who will be in a better place. We've got a market that we work in. You've got to work with the market that we've got, and there'll always be opportunities, and there'll always be things to steer clear of. And the one thing that I'm proud of to say is that apart from my own property portfolio and the results that I've had over the last decade and what I still do today, is looking at the fact over the last couple of years, those investors that I've helped out who have been guided from the fact of purchasing properties in certain locations and whatnot, and the fact that I've made more millionaires than Lotto has over the last few years. If you just really think about that, I've made more millionaires out of property investing than what Lotto would have probably paid out. I don't know the exact number of what my investors have made. I haven't sat there and calculated it, but it could be hundreds of $1 million, $500 million, $1 billion. I don't know exactly, but I know that a lot of lives have been changed, and people are in good financial positions because of that. So congratulations to them. At the end of the day, they're the ones that signed on it online, made decisions, and arming themselves up to change their positions of that of today and into the future for the family and generations to come. So on that, I'm about to go to the doctors, get myself some prescription drugs to try and make myself feel better. And besides that, we'll catch up soon. Have an awesome day, and be safe with your property journey. We'll catch up soon. Bye.